A major shift just took place in the XRP ecosystem, and fresh institutional activity is beginning to reshape market sentiment. Let's break down what's happening and why it matters for anyone following the evolution of XRP. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. A significant development has arrived with the launch of the Bitboy XRP ETF. The introduction of spot exposure through a regulated ETF creates a pathway for investors who prefer conventional financial structures while still gaining access to a digital asset that has operated for more than a decade. Bitboy highlighted several reasons behind their decision to introduce this product. XRP is one of the longest-standing crypto assets, operating for over 13 years with a well-established global community. Its market capitalization, which sits in the tens of billions, reflects sustained interest in its utility-focused approach. The broader objective tied to XRP, improving cross-border payments and supporting future tokenization ecosystems, continues to attract attention. With the digital payment sector valued in the hundreds of trillions globally, the focus on efficiency and speed keeps XRP positioned as a token with many potential use cases. Bitboy also emphasized XRP's track record of resilience. Through various market cycles, regulatory uncertainties, and shifts in investor sentiment, the asset has maintained a notable degree of relevance. Their statement expressed confidence that the ETF launch contributes to the next chapter in XRP's mainstream progression. Trading activity reflected that interest immediately. During the early moments of trading, the Bitboy XRP ETF recorded over 150,000 shares traded, representing nearly $4 million in volume. As trading continued, the volume surged past the 10 million mark, moving toward levels comparable to records previously set by Canary Capital's launch earlier in the year. This initial activity demonstrates that demand from market participants is tangible and measurable. However, the current movement does not stop with Bitboy. Two major institutions, Franklin Templeton and Grayscale, are preparing to introduce their own XRP ETFs. These launches are scheduled within days of the initial Bitboy rollout, increasing the overall exposure and accessibility for investors who prefer institutional-grade financial instruments. The size comparison adds even more context. Franklin Templeton oversees more than $1.5 trillion in assets under management, making it 40 times larger than Grayscale, which itself is a substantial player with tens of billions in digital asset exposure. When institutions of this scale begin entering the same asset category, the market impact tends to expand through increased visibility and broader participation. Analysts are already projecting possible net inflows for the Franklin Templeton ETF, ticker EZRP. Some estimates suggest between $150 million and $250 million could enter the fund on its first day. Other forecasts extend even higher, pointing toward potential inflows exceeding $245 million within that initial window. These projections do not represent certainties, but they reflect the magnitude of interest circulating within institutional circles. This momentum is occurring while the broader economic landscape remains mixed. Recent employment numbers in the United States showed just over 119,000 jobs added, indicating a period of uneven economic performance. Such conditions often contribute to slower market movement across multiple sectors. However, there is ongoing discussion about potential economic stimulus aimed at improving market conditions, even if that could contribute to higher national debt in the long run. Despite slower market momentum, institutional attention toward XRP remains clear. The cryptocurrency market as a whole is sometimes influenced by external macroeconomic factors, but underlying demand from major financial firms continues to show that interest is not fading. While no one can control or predict global markets, the trend involving XRP ETFs suggests that various institutions are carefully positioning themselves for long-term participation. As more of these ETFs begin trading, the data from volume, inflows, and market activity will offer a clearer picture of how much institutional demand XRP attracts. The early response indicates strong curiosity and participation, and upcoming launches from larger financial firms may expand this pattern further. What remains consistent is the growing role XRP is beginning to play within regulated financial products and the increasing attention from established institutions looking to diversify into digital assets. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.